Hello, guys. Good morning. Welcome to our morning live trading session. So, as usual, this is the session where we'll analyze the market together and try to look for entry opportunities. All right. Um, and I have my co-host here with me. I have Biodun here with me. Biodun, please say hi to our viewers.
Hello, good morning, everyone. How are you doing today? And how is the class? How was your night? Today's class, we are going to be talking about how to analyze the market. And I would like to say that if you are a new trader joining us for the, please pay attention to the class. And if you have any question, just drop it in the chat room, and I'll be reading it out for you. If you also have any suggestion on the kind of trade Leo should analyze, please also drop your suggestion in the chat room, and I'll be taking them. Then, if you do not know how to join the premium signal group, just ask in the chat room, and either Leo, either I or Leo will be there to answer all of your questions and concerns. Enjoy your class, guys.
All right. Thank you very much, Biodun. So, guys, let's do this. Okay. I'm already making analysis even before we started our live session. Making analysis on AUD USD. Okay, and you see how the market has been moving around on the AUD USD pair. So right now, this is a valid entry. I wish I saw this earlier. Okay, um, if you look at the 4-hour time frame, you see how the market has been respecting this fair value gap zone. So let's use let's use our Fibonacci tool to see what the market has been doing around that area. So you see the market respected the zone twice. Yes. See how the market respected even uh, our Fibonacci too. You see the market came back into the premium zone and then the market sold down. All right. You see the market came up again and now it's making the same movement to the downside. All right. Yeah, if I saw this earlier, I could have taken this because this is a valid entry zone for me. All right, it's a valid entry zone. It's a premium area, and I sell on the premium and buy on the discount area. Okay, so you see, it's a valid entry, and this is the 4-hour time frame. But obviously, we can't take this trade right now because the market has already gone past our entry area. Right. So, but now we still have the opportunity. When this market creates a low now, we can then draw our liquidity, use our Fibonacci tool to get where the market might reverse from, right? But first of all, I want this market to break this change of character, this low. I want the market to go below the low, all right? So that is when I will then um, look for a sell opportunity, all right? So when I have a change of character here, then it's going to validate this area, right? It's going to validate this fair value gap and this other block area. So the market would most likely come back into the fair value gap or the other block and then continue to trend to the downside. All right. So that is for uh, AUD USD. Okay. Australian dollar against the United States dollars. All right. So let's look for more opportunity. So let's analyze AUDCAD. Okay. All right. So let's delete this chart and make fresh analysis. Okay. Let's make fresh analysis. You see this movement? Let me show you the beauty of my Fibonacci tool. All right. You see this movement? After the market went above this area, okay, and then the market was around here. If I set my Fibonacci to, you see, it gave me a valid buy limit around this zone. Okay, if I took a buy limit here, you see how much I could have made, right? The market would have come to my TP because this is where my TP would have been, right? So guys, I'll keep advising you, come and join my premium group, fund the account with at least $200 so that you can have a one-on-one session with me. And then you get to have this Fibonacci too. Trust me, if you have this Fibonacci too, all you have to be looking for is just your high and your low. Honestly, look at this. This is the 4 hour time frame. Imagine taking a trade on the 4 hour time frame. Guys, just imagine that. Okay, look at this also. Look at this. So if I use this Fibonacci tool when this market made this move to this area, you see how it came back into the Fibonacci and then bought to that Fibonacci level again. Okay, so this could have been my entry, my stop loss, and my take profit. All right. So um, okay, let's look for entry. So right now we have this movement, we have this low. So let's see where the market might likely reverse from. Yes. So you see, this is a valid area. Why? We have our fair value gap here, the lowest fair value gap. We have other block, and you see how the market. So this is a valid entry, guys. When the market comes back to this area, I'll just take my entry from this first area, from this first red zone, and then target this high, right? And this low would be my stop loss. See? So see how the market always respect that. See? So this is the proper way to use the Fibonacci tool. So if you join my premium group with $200, if you join funding up to $200, then you get to have these two, right? You get these two. You can use it um, as much as you want. Okay, it makes SMC pretty much easier. All right, because you don't have to do anything much. All right, all you have to do is just wait, draw it out. Um, once you have once you have your high and your low, all right, all you have to do is once you have your high and your low, then just draw your Fibonacci tool from the area to the other area and see how the market is going to respect it. All right, even though you are going to have a drawdown, but as far as the market comes into such area and give you an entry, that's good enough, isn't it? So this is the next move. um I think the market is going to give, right? This is the next move. So let's zoom this in and see the market respected this gap. We have this high. So let's see if that also goes well with our Fibonacci. You see, guys, you see this? Guys, are you seeing this? Come and learn SMC. Look at this. So I drew it from this high. This would have been my stop loss. This would have been my take profit, and see how the market is respecting the Fibonacci too. All right. But that trade is too long. I just want you to see that the Fibonacci will always respect it. The current trend right now is uptrend because this low wasn't broken. but we got a break of the high. So the market is breaking highs, all right, broke this high, broke this high, broke this high. So this is a valid trend to the upside. Right now we are getting this down movement. So I think the market, when the market gets to this area, the market is going to make another high move. All right, another bullish, strong move. So um, you can go to the lower time frame to see if we have a proper entry for a downtrend since the market is heading to the downside for now. Right. Okay. Yeah, this always aligns to 2.45. Yeah, I was wondering why it is 2.43. Then I realized that, okay, yes. So you see, that is how I get um, a perfect stop loss and a perfect take profit, right? So I'll just wait for this market to sell down to this area and give me the entry I need. So let's go to the lower time frame. Let's see if we can take opportunity on this, right? So we have a low here, okay? So right now the market is breaking the low, right? The market would most likely break this low. So once the low gets broken, then we can look for opportunity for a sell, right? Okay. So when this low gets broken, we can look for a sell opportunity targeting areas the market hasn't mitigated, right? We have these internal structures. So we have these internal structures. These are breakup structures. Okay, the market broke structure to the downside. The market broke structure. Okay, so let's delete that. All right, breakup structure. We have another one here. Guys, this is how you do your stop down analysis, okay? So that you get a proper entry. You know, you only get a proper entry when everything aligns. So right now, to get everything together, you need to do everything that needs to be done. So right now we have an internal structure that is trading to the downside, right? So you see, there's something that keeps repeating itself here. Every time the market trades down, what happens? It breaks structure, it reverses back to the upside um, to mitigate an order block, okay, or a fair value gap. You see how this fair value gap got mitigated? Say 50%, 100% of it got mitigated, and the market sold down. All right. Same thing happened here. We have this other block. We have this fair value gap. The market came to this other block. Okay, mitigated it, and then the market traded to the downside, 50%. Yes, the market mitigated 50% level of the upper block and then came down. The same thing happened here. Sorry. So same thing happened here. We have this change of character. The market came back, mitigated the change of character here, and then the market sold down to the downside. So now we have this movement to the downside. We have this change of character, but the market didn't go there, right? It mitigated this level and then continued to trade to the downside. So if this market would come back now, I think the market is going to mitigate this area, all right? It's going to mitigate this area. Then it's going to take inducement here. It's going to take people out, okay? But for now, the market is still trying to break this structure to the downside to give us a higher time frame change of character, right? So these are movements that we could have, taken advantage on the lower time frame, right? So that is it, guys. Okay, 3 minute time frame. Yes. So you see, this is where we can actually take advantage of those lower time frame movements, right? So we are getting a change of character. Once we have a proper change of character, then we can now um, wait for the market to come back into this area, any of this area here, to give us a proper move to the downside. All right, we already have a zone marked out on the downside. Right, we already have our zone marked out, zone where we think the market is going to go down from. But right now, we need to get a proper change of character before that would happen. All right. So this is AUDCAD. Now let's go to another pair. Guys, if you have any suggestion, please let me know. Okay. So AUDCHF is almost at the area where I think, okay, so I made this analysis before, and the market is currently there. All right. So you see, all right. Market is currently around this area, and so you see how the market is going to respect this. Yeah. So we call this the correctional move. All right. It came to correct all these areas, this big fair value gap. From this area to this area, we have a huge fair value gap. Okay.
Hello, Leo.
Yes, Biodon.
Yeah, I have a suggestion from for Steven.
Okay.
GPB, GBP USD.
All right. Thank you, Paul Steven.
GBP USD. Yeah.
GBP USD. Okay. All right. So GBP USD. Let's go analyze GBP USD. Let's go see what is going on the GBP USD pair. All right. Okay. GBP USD. All right. So let's delete. Let's remove everything here. And the market has been trading to the downside um, for almost 2 days now. Okay. So we have the market heading to the downside. We had this around this area. We had this change of character. Sorry, liquidity zone, and then we had this higher time frame change of character. This is the 4-hour time frame. So we had a higher time frame change of character around this area, and the market made a move from this area, this fair value gap area. All right. You see how the market made the move? So now the market is heading back down to that area again. Okay. And since we already have this movement around here that gave us, you know, made us believe that the market would continue to go down. So what I'll do is I'll just mark out this area with my Fibonacci 2. This is the lowest part. Okay. And I'll just draw this and see. Okay. So right now the market is heading to this zone. Okay. It's heading for this. Yeah. So until this market goes below this zone, we can still look out for a valid buy setup, right? So we have this other block around this area, which the market can still go from, right? We have that other block. So the market respected this gap. That is why the market came all the way to the downside. So you see how the market respected the gap there? You see? Respected this gap here. Okay? So it mitigated the whole of that gap. The market came here. You see? Mitigate this gap, and the market came down. So now that the market is coming is down, let's see what would happen around this whole area. All right, we have another block around this area, and the market is inside the other block right now. And with our analysis, the market is telling us that after breaking this high, then the market is supposed to continue to go up. But if this low gets violated, then the market might just continue to trend to the downside. All right. So right now we want to see. Let's go to the lower time frame. Let's see if we have a gap or if we can refine our other block to make it smaller, a bit smaller. Okay, so we have this other block here. Yes. So let's just wait and see what happens when the market gets to that other block. Okay. Guys, don't get confused. Okay. It's still respecting the higher time frame, but in SMC strategy, there's what we call refinement of other blocks. Okay, so you can actually refine your other block if the other block is too wide, and since the market is still heading to the downside, I think we have another other block smaller on the 1 hour time frame that the market would most likely come to retest before going up. All right, so all we need to do is just allow the market to get to that area and see what happens next. Okay, so these are inducement zones. Because we have concentration of sellers around this area, and they all get whooped. Okay, they got, in fact, the market turned them to uh, the liquidity. You see how the market took them out? So they took their, we call this area inducement area, an area where you think the market will start going up, then the market will just come back to induce everybody there. So everybody here, they must have had this other block, all right, this support, hoping that there's concentration of demand around this area. So when the market gets here, the market is going to buy. But when the market got here, what happened? The market went up a little bit, giving them a small profit, all right, making them believe that yes, this market is going to continue to the upside. But the market came down, induced them, and the market is still heading to the downside. So that is why I believe that the market would, move from this area. So let me just mark this area out. Using this as our stop loss, targeting this area as possible take profit. So let's round that up to to 4. I don't like going that far. Let's do it. Let's make it 3. Yes. So we have 3 to 1 RR. That's 1 to 3 risk to reward ratio. All right. So our analysis is based on what is happening on the 4-hour time frame. All right. And as you can see, as I've said earlier, the market was heading to the downside. I just want to walk you guys through why I made this analysis, why I think the market is going to go up. You see, we have this high. Let's just start from here. There's no need going up. We have this high, this low, this high, this low, this high, low, another high, low, high, and low. And then we got this high, we got this low. Okay. And then the market started making a move. All right. So this was our last high. And remember, when the high gets taken out, then the market is about to change direction. So the last high got taken out. We have our last high, we have our last low. The last high got taken out, giving us a change of character. Okay. Remember, this is our confirmation that the market would trade to the downside, to trade to the upside rather. So the market changed character. You see how the market came back into the zone and then sold for a bit, sold to this level, right? So right now we have a fair value gap here. We have an order block around this area. So I think this market is actually coming down to mitigate this order block before it continues to trade to the upside. All right. So this is the analysis on GBP USD. Guys, if you have any more suggestion, please let us know. Okay. You see, it's better this way because if you are giving me suggestion, then I know what to look out for. Okay, I know where to focus on. So if I just keep making random analysis to get entry, sometimes might be very hard because I love trading all the whole currencies. Yeah, I don't think I have any specific currency I like trading. Um, the only instrument aside forex I love trading again is the XAUUSD. All right. So XAUUSD is not a currency pair. That is gold against the United States dollars. Okay. So I love trading the gold also because it's very volatile, though it sometimes misbehaves. All right. So let's just wait for this market, see what happens there. It's already on the 4-hour time frame um, order block. All right. So right now we have our 1-hour time frame order block marked out. So let's see what would happen when it gets there. All right. So it's almost there. It's already approaching it. You see, almost just few pips down, and the buy limit will get triggered. Okay, guys, do you want us to set a buy limit here? Let me know in the chat section below. All right. If you want us to take this trade, I strongly believe this market will continue to trade to the upside. Okay, we already have all these whole mitigations. So the other thing here is we have this other block, and the other block hasn't been mitigated. Okay, we have this other block. The other block is not yet mitigated. So we have, let's name this POI, right? So because if this market already mitigated 50% of this other block, and then the market is trending to the downside right now. If this market breaks this area of demand, okay, if the market breaks this area of demand, then the market is most likely to come to this area and then use this whole area as an inducement area. All right. So this is my analysis, right? So let's make another analysis. Okay. So we have the market respecting this area here. The reason why it's respecting this area is because we have a tiny fair value gap around here, and the market, you see how the market is trading to the downside. Yeah. So we have fair value gap, we have order block, and the market is currently respecting both. All right. Okay, so this got taken out. We have a new liquidity around this area. Yes, I was expecting the market to take it out because we have a break of this to the upside. We have a break of that trend line, and the market went up. Okay. So our next point of interest here is we have all these liquidity areas, okay, around here, and then we have this other block and this fair value gap here. So let's mark that. Let's mark out the other block and the fair value gap zone. So I think if this market would move up, it will come to this area and then go down a bit, right? So we have break of structure, all right? We have break of structure. We have this whole area. We have this whole area. This whole um so this is a liquidity zone, okay, because we have this rejection, we have this rejection, we have this rejection, we had all this area. So most traders would retail traders would have set a buy limit around this area, hoping that the market would move from this area. Okay, hoping that the market would make a move to the upside from this area, using here as their stop loss. Okay, because the market hasn't gone go below this low before, so they would feel this is where the market would reverse from. But what happens? The market just came down, took out their stop loss, and then the market started making a move to the downside, to the upside. All right. So this is the next area where I think the market is most likely to come back to make correctional movement before it continues to head to the upside. Okay.
Enolio,
Yes.
Mohammed is suggesting CAD, CHF.
Okay. Thank you very much, Mohammed. CADCHF. All right. So we have a change of character here. All right. So Mohammed, let's go do CADCHF. All right. CADCHF. Okay. So let's remove all the previous junks and make a fresh and new analysis, right? So let me just see if my Fibonacci tool would give me a proper entry here. Okay, so all these areas has already been mitigated previously, and the market still continue to come down. All right. Let's go to, okay, let's just increase. All right. So I want us to be able to see that better. So right now, we'll be focusing on this, okay? Because the market came to this area. We have we have another block here, and the market has been respecting that other block. Okay, the market has been respecting this other block. Um, guys, I want you to take note of something. Anytime we have too many other blocks, that means we have anytime we have too many move on another block, that means we have liquidity around such area. Okay, so all this area now is a liquidity area. All right, these are liquidity area because see, look how many touch we had. We have one, two, three, four, five, and this is the sixth time. All right, so it is most likely that the market will take liquidity before going to the upside. All right, so when I have too many touch on a support or a resistance area, I stay away from such trade, right? Because we have too many liquidity and liquidity is yet to be taken out. So the market can just come down, okay, take all these areas out. Okay, it might just come maybe to this area, right? When we have maybe news, the market will just come, go below here, take everybody out, and then the market will continue to go up. All right, because right now we don't have a proper change of character. We only have a change of character when the market goes below this area because this is our high, our low, another high. Okay, we have another high here. Before this low gets, um, got to this area, before this low was created, and then after this low, no any other low has taken it out. Okay, no other low has taken it out. Let's go to a lower time frame. So we have this high. Okay, let's use this. This is a proper high, and the market hasn't gone above that. All right. So let's make analysis. Let's see how the market has been rejecting these zones. So this movement was created from here and formed this new high. Okay, and then the high never get. Okay, the high got broken, and then this gave us a kind of a change of character here. Then the market came down to retest that zone. Okay, another block area, and after respecting it, the market went a little bit up. Okay, and when the market came up here, what happened? The market respected this whole fair value gap area, fair value gap and other block. So we had our other block here. See, the market respected. Okay, respected the other block. Just a tip inside the other block. I think the market came back here to respect this other block well. Okay, giving us a good dive into the other block. So see how the market came back to respect the other block well, and then the market made a move to the downside. So if this market was actually making a move to the upside, I think this other block would have gotten taken out. Okay, but since the market is still respecting this other block, I strongly believe this market is going to continue to the downside. All right. And looking, okay, all these areas, we only have we only have this gap. So let's use our Fibonacci tool here and see what the market would give. So we have fair value gap, and our Fibonacci is pointing out our order block area. Okay, but right now, aside this high, we also have these highs because they broke structure here. So this is a valid high. Okay, it's a valid high, and that is why I think the market is actually making this move right now, because we have a valid high here. And let's see. So you see, it's respecting the high. Okay, the market is currently respecting this high because that high left a huge candlestick shadow and a very small body. So that's the rejection area, and that is also an order block. Right? So but we still have this gap here, which I strongly believe that the market would come back to take out. So it's going to use all of these areas as an inducement area. Okay, inducing everybody, every seller. All right. No, sorry. I wanted to use break of structure here. Then we had another break of structure. But I won't consider this a break of structure because it's a week. Okay, let's go to the lower time frame. Let's go to 15-minute time frame. Okay, so we have a body on the 15-minute time frame. So it's a valid break of structure. But that can also be our liquidity because the market went above the area, the zone. All right. So we have this. Then the market made this move. So this can actually be our change of character. Okay. Yes. You see how the market respected this area? We have a very, let's go to the 5 minutes. So after this change of character was created, the market left some gaps, right? So we have this gap here, and the market mitigated the gap, right? The market came back, mitigate this gap, mitigate the other block that created the gap, and then the market continued to trade to the upside, right? So now I strongly believe that the market would come down, right? Because all of this area is a liquidity pool. Okay, we call it the liquidity pool. So that is where we have so many buyers, right? So this is like a trap zone for buyers, right? Because every time the market will go to that support area, market would buy. Okay, so the liquidity providers are going to be here. Okay, they are going to be waiting for those buyers to take their trade from here, right? And then make them believe that the market is going to go up. Because right now, most traders will feel like, yeah, this is a strong support zone. Every time the market comes to this area, the market will always go up. But remember, where we have a lot of liquidity, the market will always take out liquidities. So right now, I think the market is going to take liquidity around this area. Okay, so that is why I won't advise buying right now until liquidity gets taken out. So this is the low, and if you look from the 4 hour time frame, liquidity wasn't taken out from here. Okay, we don't have any liquidity around this area that get taken out. So the liquidity is not yet taken out. So I believe liquidity is going to get taken out before the market continues movement to the upside. Okay, this is just a lower time frame movement liquidity on lower time frame, 15-minute time frame. Okay, so these are just short opportunities that a scalper can or actually use to stop the market um, for some times. Okay, but if you want to look at the long run,
W,
yes, Biodun.
your speaker is a bit far.
Oh,
Then
thank you,
it's louder now. Then
thank you, Biodun.
the great is that I think there is a kind of opportunity on BTC and
On
GPP.
BTC, on
You said on
BTC,
USDT,
BTC USDT. Okay,
yes, and GPP, JPY.
okay,
He's
GBP
saying,
JPY.
yes, he's saying, please analyze.
All right. Um. Okay, so let's do for GBP JPY. Then we will move to um BTC USDT. Okay, I just hope we get the time to finish on time. All right, so let's go to the 4 hour time frame. Let's zoom in. All right, so we have this taken out, change of character. Okay, we have liquidity pool around this area, and the market took out the liquidity. So we have liquidity grab here. Okay, so now let's zoom out and see how the market is doing. So right now we have this liquidity area. Yeah, this is a liquidity zone. All right. The market will always take liquidity anytime it wants to make a new move. All right. So right now, let's look for where the market might likely make a move from. So we have, let's go to 1 hour time frame. Let's see if we can get. Okay, so we have this gap. You see, I think this market is going to make a move on this gap. So let's take it from here. We have this breaker block, this little breaker block, and the gap. Okay, let's take it from the other block. And you see the gap, the other block, and the breaker block aligns here. And I don't think the market has taken that out before. Yes. I know you are looking at this area right now. You think the market is going to provide an opportunity from here. Even though the market is going to go up from this area, it's just going to be a short move. Okay. Yes, you can look for an opportunity there, but trust me, it's not going to end well. All right. That is why it is very important that you look for, you know, um, where you think the market is going to make the bigger move. Okay. I always look for the bigger move, not the smaller move, because smaller moves is too noisy. Right. and it always creates some kind of low profit. Okay, it gives low profit. So the grade, if this is what you are currently looking at, I won't advise this. Okay, we have liquidities around this area that I think the market is going to take. We have liquidity here. We have liquidity here. It got taken out from this area previously. Okay, we have a liquidity grab here. Took out buyers. The market came back down. Took this, and then we have the market approaching this area. If you are going to take this trade, please make sure you don't go too long, okay, and make sure you are using a very tight stop loss. All right, so your entry can be around here, your stop loss can be around here, and just target maybe this high, or okay, we have this area. Okay, just target maybe 1:5, 1:1.5. Yes, and then see what happens. All right. But if I'm going to take this trade, I would love to see a confirmation on the lower time frame, maybe the 5 minute time frame, a small change of character, maybe. Okay, and that can actually boost my that can boost my confidence. All right. Thank you very much, the great. This is a very great trade lookout. Okay. So it's worth looking out for. All right, this trade is worth looking out. So you can keep an eye on this also. So here is what you're going to do. When this market comes to this area, just go to the lower time frame. Okay, go to the lower time frame and look for a change of character. Okay, you want to see this high taken out. All right, maybe this high, or maybe if the market goes below here, probably maybe this high. Okay, so if the market takes out this high, if the market takes out this high, then just look for where we have an order block or a fair value gap. Then take your set your sell limit, buy limit around the area, and see the magic the market is going to give you. All right. So we have this area of demand right now. That is if the market gets taken out. Okay. If this market goes above here, come back into this area, you can buy. Okay. That is the confirmation for this market making a move from this area. Okay. So this opportunity is based on this liquidity grab, okay, that was previously taken out here. Anytime we have a liquidity grab, the market would most likely go up, and that is why this move was created. Okay, but now that the market is heading back to that area, the market might, go up. So we have this zone here also, and I think the market is actually respecting this zone right now. But whatever happens, just make sure you have a proper confirmation before you take any entry. Okay. So let's go to the BTC USDT. Let's quickly make that before we end our session. All right. Yes, I think this analysis was made and the market is still respecting the area. So we have this. I took this over the night and the market respected it, right? So I already closed the trade. The market came to this area. When it started making this move, I closed the trade. I don't want a situation where I have to wait for you know, the market coming back into my zone. I had to wait for long. I don't like that. That is why I closed the trade. So if this market gets to this area again, I think the market wants to mitigate the other block that is here, because we have this other block, and the other block hasn't getting mitigated yet. Okay, the other block is yet to be mitigated. So I think the market would come to the other block, and if this market moves to this other block, um, then here can actually be our take profit level. Okay, suggesting this. So this is a good trade. Okay, the market is kind of respecting this right now, and that is why I took this earlier trade. The market came to this area. Yeah, so I closed the trade when I got this rejection here. So it's a good trade. Okay, all right. So we have this other block that got respected, and the market made a move. But since the market is heading back up again, um, I think the market is going to come back into this area. We have this zone also, and the market is currently respecting it. Okay, but this is the 15-minute time frame, and the market has already made this move. Yeah, we could have entered from here, maybe target this low, because even if this market is going to come back here, at least it will give us a little profit. We can run away from the market and then wait for another entry. Okay, the same way I did here. When I entered here, remember what I said? I said when I got this rejection, I closed the trade, right? So we could have entered from here and then allowed the market to give us another rejection. So when I get another rejection, I'll just stay away from the market. But the market has already moved past my entry, so I'm not going to advise for this entry. Okay, I'm not going to advise to take this entry right now. On the lower time frame, we have this, and that is an inducement. Okay, inducement happens where we have liquidity. All right, so we have this liquidity area, and you see how the market went above it. Okay, went to this area of demand, resistance, and the market went down. Okay, so we could have taken this entry since every requirement also meets. Okay, this is the 5-minute time frame. So this would have been our entry. Would have targeted. So we would have made this as our stop loss area and target to 1 to 2, because we don't want to go far. So you see, this market would have, um, go our way. But since we didn't get this earlier, the market has already moved from where we can take our entry. So the next opportunity now is to wait for this market to, let's go back to the 5-minute time frame and see if we have, okay, so we don't have any fair value gap. We don't have any fair value gap. Um, so there's no entry here. Okay, there's no entry here. We just have to wait until the market make another move. All right. So if this market comes back into this zone, you can take an entry. But if it doesn't, just allow the market to do its things and look for another entry opportunity. So on the higher time frame right now, you see how the market is respecting that area. You see, See how the market respected this area, and the market is making a move to the downside. Okay. But unless you are going to hold this trade for long, I won't advise you to enter it for now. Okay. Unless you want to hold the trade for long, because if we take this opportunity now, if you take this opportunity now, you are going to have a big drawdown if the market go up. Okay, if the market makes a move to the upside, you are going to have a big drawdown, and if the market is going to hit your stop loss, then you are going to lose a heavy amount of um, money. All right. So that's why I will always advise you guys to be careful with your entry positions. You want to take a trade from where it's actually happening, not when the market has made a move. All right, it's very important. All right, guys. So we have our Telegram question and answer coming up by 11:30. That is less than 25 minutes from now. So, guys, we've come to the end of our morning session for today. Um, let's meet on the Telegram. Let's discuss better. All right. Let's have a one-on-one chat. Okay. So, Biodun, do you have anything you want to say to them before we end this session?
Nothing for now. I just want to encourage everyone, for those who want to join the premium signal group, just note that it doesn't have to be when the live stream is going on. You can do it anytime. Anytime you have the money and you want to join the premium group, just come to the live stream and make your deposit. $10, $15, and $200. The $10 is for 2 weeks, while the $15 is for 1 month. I personally prefer the $15 because for to use $10, it will take me to make two deposits, which is $10, which sum up to $20. But if you are making the one of $15, it's just for 1 month. You don't need to add additional $5. Now, a lot of people have been asking me as well that this payment, who will it go to? Please take note. The money we are talking about here, the deposit we are talking about, is not for us. It's for you. You are actually depositing it into your own personal account and use it to trade on the premium signal group. You are not giving the money to anyone, and you can withdraw the money anytime you so wish to. You understand? And if you want to have a one-on-one session with Leo, all you need to do is to make a deposit of at least $200. Now, why we are doing that is if you make a deposit of $200, we know you are really serious with this business and you want to make money. Then we can assign someone to you, which is Mr. Leo, to put you through on how uh, for you to ask any question, analyze the market for you, and ensure you make consistent profit. So if you have any question that you would like to speak out, please join us by 11:30. We are having a Q&A section on Telegram. You will see it as soon as it's live. Just click on it to join and ask your question. Enjoy your day, guys.
All right, guys. So we'll see on the Telegram live. Bye for now.
Yeah, bye, Leo.
All right. Thank you very much, Biodun. See you on the Telegram live.
Yes, sir.